Hashtag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Thanks for having me.
All right, so we're talking Google Alphabet here. Kind of pushed aside some of their early concerns about adoption of AI, maybe eating into their search business at this point. But if you look at digital ad spend, it continues to be pretty robust. And I'll tell you, I'm just one person. I'm not going to go away from Google search because Bing uses ChatGPT in their queries. But at the same time, do you guys have data that kind of supports this rally that we've seen to all-time highs?
Yeah, I mean, a lot of the data is in the numbers. They are the search leader, right? I mean, 80% of the revenue comes from search, and 84% of desktop search goes through Google. So, I mean, they are by far the dominant leader. Clearly, they've also got, YouTube and cloud chipping in that other 20%. But, overall, I think that I would disagree with you a little bit on the AI angle. I think that this is the biggest threat to Google, and it's early, right? I mean, you're not going to switch over search engines just because another one claims to use AI. I mean, Google tried to use AI for a little while, and they produced some insane results. I don't know if you guys saw some of those, but some of the recommendations were unbelievable. Yeah, I think that this is a big threat to Google coming, in the future. In that, right now, the way that they make money is people search for something, and a lot of what they see is paid advertisements, and they can decide if they want to click on those, and then some of that money goes to Google. Obviously, they've done extremely well over the years. I mean, you can see, first quarter revenue here over the years. This, they're growing really quickly. The stock chart looks similar to this, and it should. But when you look in the future, I mean, if you've used GPT or any of the AI platforms, you can get, generally speaking, much easier, more straightforward answers to a question than you can if you search on Google. Because a lot of times you search on Google and you get a lot of ads, a lot of the things that are not as relevant are towards the top because they paid to be towards the top. So while we're very early in AI, I can imagine a future 5 years from now where search is completely changed and you can just type something in and you get the answer, you get the website that you're looking for that you need, and Google may have to somewhat reinvent itself. I mean, yes, they're the market leader right now, but, go back 20, 25 years and how many engines could we name, right? I mean, Ask Jeeves, Yahoo, which is hardly used anymore, Dogpile. I mean, I could name a few. That's off the top of my head. You can go back. There's a lot of those that used to be in the game, and Google crushed them all because of superior technology. And now we've got a potential shakeup in technology that is even greater. And even though they're the market leader, if they have a focus of just making money and not necessarily serving the best content to the end user will shift and go somewhere else. That's what happened back in 99 to 2000 in that area where Google started to take over because they started to give the best answers, and that's what people want. They don't want to go to a place that makes money. They want to go to a place that gives them the best answers. So there's a little bit of an inherent conflict of interest with search engines, and yes, they have the absolute most dominant position you could ever ask for. So it's theirs to lose, but there is potential, I think, for them to lose it just because this technology is so advanced and so quickly being adopted and could be advanced even more quickly. So, again, it's theirs to lose, but it is a threat for sure.
Landon, I read about this stock and their advertising revenue is growing. We talk about that on these shows every day, but I think what's changing for them, these YouTube shorts and their ability and what that's doing to their overall ad revenue on YouTube and their ability to monetize that along with monetizing AI. I think people are underestimating how popular these YouTube shorts are. And that's just another thing. Then there's all the economic part of it that are getting better. And I think their key is to keep people engaged with what they're doing with the YouTube shorts and keep piling on ad revenue, which they're doing. The numbers are getting better. How about this? Their earnings before interest and taxes, their margins, 31.6%, the highest ever that they've ever achieved. So this is a company doing things extremely well. They're getting better. They're just not as flashy and sexy. My biggest problem with Google Alphabet right now is the PE of 29. December of 2022, it was 19. Now it's 29, Landon.
Yeah, it is. It's getting expensive. They've had a lot of success, and that's how they're justifying that PE. And you're right. I mean, YouTube is a big driver. There was approximately 4 billion hours last year of content watched on YouTube TV, and a lot of that is shorts. Connected TV is expected to grow about 15% over the next year. So yes, absolutely. But right now, that's a very small percentage of their revenue, which is wild to say. YouTube's such a big company or a big brand, but it's a small percentage of their revenue. So for it needs to really take off in order to counteract the potential drop or the potential threat of AI to their search engine business, which is, again, a really big part of it. They're also doing well with their cloud, right? With the cloud computing and cloud storage. They're not growing as quickly as AWS or as Azure from Microsoft, but they're growing. The entire industry is growing about 10%, and I think they're at about 7%, plus 7% on a year-over-year basis. But they're kind of the small one of the three, as you can see here. The smaller the bottom line there, but Amazon's going to hold on to that lead, I think. But this is it's a high margin. It's a really simple business to run, but it takes a ton of money and a ton of resources, which these companies have. So they're the three leaders right now. They can grow that a little bit as well. Not nearly as sexy a business, probably the least sexy of the three, but it's a solid business. But you're right. I think ads are going to do well, especially on YouTube. This is a good year for ads. You got the elections and Olympics, which are every 4 years, both of those, and in both of them, obviously, they're happening this year, so it's going to be a good year for ads. But long term, you talk about that PE ratio, and I just know how disruptive. Again, I don't want to pound this too much. I just know how disruptive AI is going to be on search. And there will be a company that says, you know what, the only way we can take a crack at Google is to completely reinvent the way search works. And it's not going to be pages and pages of results. It's going to be the correct result. And that's going to completely disrupt Google once people start to use that. I don't know which company that's going to be, but that I'm telling you, that will be the model that disrupts search. And it could be a very drastic, very quick disruption to Google, which again is 80% search revenue. So they've got to be the ones that innovate that, not someone else, or else they're going to be the Ask Jeeves like 20 years from now, right? Where it's just totally left in the waste bin. So we'll see how that plays out. Again, it's theirs to lose, but it is a huge threat. I think that they've got to get ahead of this one.
Yeah, Ask Jeeves. You forgot on Netscape too. There were some other ones in there. Right. But Landon, real quick, when you look at this, Kevin and I talked about it earlier on in the show. The bar is really high for this company. You guys mentioned valuations, but their forward PE is still cheaper than the other Magnificent Seven.
Oh, they're still one of the cheapest Magnificent Sevens, even though they're elevated.
Right, exactly. But, we got earnings in a couple weeks for this company. I mean, are you guys still bullish on this one, or does this give you a little bit of pause just because of the lofty run that we've had?
Pause because of the lofty run. I mean, this, you can get me started about how narrow this market is, and everything's going into just a few companies. I think eventually we've got to get some breadth in this market, and when that happens, you're going to start looking at some of these companies that have made enormous runs, have the big PE ratios. I mean, you guys just talked about one of them. We'll see where they go, but yeah, I mean, this is. I'm pausing on this one just because of where it's at right now, the run that it's been on. It's a great company. They're killing it. I mean, they're the market leader in so many ways here. But the run, I think, is giving us pause. We'll check back in, I'm sure, right before earnings. But right now, I'd be tapping the brakes.
All right. Great stuff. Great data. As usual, Landon. Have a great day.